As I speak, the Marcus Today strategy portfolio is up 13.06% since April the 14th. So that's in just over a month. Our strategy portfolio, which is a real portfolio, real money, taking all the numbers into account, including fees, spreads, dealing costs, everything else. At the end of that, at this point in time, we're up 13.06% in just over a month. And we've done that by timing the market. And we cashed out during this tariff turbulence between February the 28th and March the 3rd. Got back in on April the 14th. So sort of 6 weeks we were in cash there. Got back in and now we're up 13.06%. The managed strategy portfolio is at a record high and the market is still well below its highs. So timing the market does work. Why don't mainstream fund managers time the market? Because they've got too much money. Nothing wrong with what they do, but they have mandates which don't allow them to do things in the short term that you can do as a self-directed investor at home, and we can do in the managed strategy portfolio, and you can do as a Marcus Today subscriber following the portfolio through the newsletter. They can't do that. Big fund managers can't do that because when you're dealing with billions, the market in Australia, but in particular, simply doesn't have the liquidity for a $40 billion fund to decide to go to cash. It would crater the market and hang on the market because of the liquidity issues for ages. Plus, most fund managers are constrained by their mandates. Almost all of them have a maximum cash component that they are allowed to go to, and they have bands that they can hold various asset classes in, and they can't deviate from those. Otherwise, they quite literally get a red flag from the people who rate their funds, from their investors, from their compliance departments. So a lot of major funds will have a cash component that has a maximum, and most commonly it would be maximum 20%. Some might have maximum 10%. Their job, after all, is to invest. The net result is that most mainstream fund managers have no option but to remain invested when the market falls over. So there are an enormous number of advantages of being a self-directed investor and being invested in our strategy portfolio, because our mandate, we've deliberately written, can go to 100%, and your mandate sitting at your desk at home is certainly to do whatever you want. So you can go to 100% cash as well. So this is why we can time the market, because we've got the mandate to do it, and why mainstream fund managers can't, because they've got, one, too much money, and two, they're told they're not allowed to. Hi, I'm Marcus Padley from Marcus Today. I've been in the stock market, well, forever really, well, since 1982 actually. And I've been a broker for many of those years, stockbroker, dealing with a lot of self-directed investors. And I've also been writing for self-directed investors in the Marcus Today newsletter for the last 26 years or so. And I was recently asked by one of my friends, one of my great friends actually, how, Marcus, do I look after my own retirement? Do I need to know all about the stock market? How do I do it? I'm a little bit scared of doing it. I want to take some control, but nobody's teaching me how to do it. So this is a little course for you, just 5 videos to get you started on how to take control of your retirement and how to do what all the Marcus Today members do, which is self-directed investment. How do you do that? How do you retire? And we're going to start with a video on how much do you need to retire.